Welcome to another Quick Bite video from Insurance Domain Training Center. In this video, you will understand how ship insurance works around the world, the need for different set of clauses and rules around the world. You also understand from this video the comparison of these global clauses. Let us dive into detail.
Ever backed into a parking pole? It's a headache. You immediately call your car insurance, and the agent checks your specific policy terms to see who pays for the dent. Now imagine that dent is on a multi-million-dollar cargo ship holding 1,000 containers. To protect that substantial investment, ship owners buy something called hull insurance. Simply put, this coverage protects the physical body of the vessel and the heavy machinery operating inside it. But because commercial ships cross oceans and dock in dozens of different countries, a standard one-page contract won't work. Instead, the maritime industry relies on highly detailed sets of conditions, known as hull clauses. Think of these clauses as the ultimate rulebooks. They spell out exactly what kinds of damage are covered, outline the ship owner's responsibilities, and determine exactly how the final repair check is calculated. Ships face extreme physical risks. Look at the severe structural damage tearing open the side of this vessel, the result of a high-impact collision. Then there is the ever-present threat of towering fires, sending thick plumes of smoke across miles of open ocean. Crews also have to navigate the danger of running aground on rocky shores, or fight through the sheer, destructive force of heavy ocean weather. With these identical dangers threatening ships all over the world, you might wonder, why doesn't the global shipping industry just agree to use a single unified rulebook to handle all these claims? The answer comes down to history. Marine insurance grew independently in different regions over centuries. Because of those different historical paths, ship owners today generally choose between three distinct major rulebooks to govern their fleets. The first major framework is the American Hull Clauses, often shortened to AHC. As the name suggests, this framework was built specifically to serve the United States market. This approach operates firmly within American maritime law. Insurers write these contracts in a very concise style, leaving plenty of room to customize the wording for an individual shipowner's specific needs. For a US-based fleet operator, this system feels completely like home. It aligns perfectly with local court practices and offers total familiarity to domestic insurance professionals. The trade-off appears when a company operates a highly international fleet. Applying this strictly American wording outside of the United States can occasionally lead to confusing legal interpretations in foreign courts. Next, we have the Institute Time Clauses for Hulls, or ITICH. This framework was born right here at the historic heart of the international maritime trade, the London insurance market. Today, these London clauses act as the common language of global shipping. They are relied upon far beyond the borders of the United Kingdom and rank as the most universally recognized standard in the world. Because the wording is so widely accepted, brokers, shipowners, and insurers across the globe can work together efficiently. Everyone understands exactly how to read the contract. However, maintaining that broad global appeal means the framework relies heavily on traditional, generalized phrasing. As a result, it sometimes lacks the hyper-specific detail found in newer, regional plans. That brings us to the third framework, the Nordic Marine Insurance Plan, which grew out of the bustling ports of Norway, Sweden, Denmark, and Finland. This framework takes a slightly different approach. Rather than a standalone list of clauses, the Nordic Plan functions as an entire modern insurance system, drafted through direct cooperation between shipowners and insurers. Because they built it together, the plan offers incredibly transparent, regularly updated instructions. If an internal mechanism breaks down, like one of these heavy engine blocks, the Nordic Plan provides strict, detailed guidance on exactly how to settle the claim. Many experts view it as the clearest system available. The catch is that its adoption remains deeply tied to its home region, so it operates without the historical volume of the London market. This matrix places all three rulebooks side by side, revealing the specific logic behind a ship owner's final choice. An operator will choose the American clauses when their fleet requires strict, customized alignment with US court practices. Alternatively, they will adopt London's Institute clauses when their highest priority is seamless, recognizable paperwork anywhere on the globe. Finally, they might turn to the Nordic Plan for a highly detailed, modern agreement built on clear cooperation between the insurer and insured.
One question for thought at the end. For IT professionals in insurance software projects, implementing marine hull policy administration system. A global insurer writes marine hull business in multiple countries. Can the same policy administration system support different hull insurance frameworks? Please understand insurance regulations and market practices differ around the globe. Understand insurance, build better systems, deliver greater value.
Thank you for watching the Quick Bite series from www.insuedot.com. Please like and subscribe to our videos for you to get notification when we upload new videos.